Welcome back. You're watching Your World at 10. Now, UK's new Chancellor, George Osborne, has announced sweeping changes to the financial regulatory system in Britain. The Financial Services Authority, or the FSA, often referred to as a super regulator, will be abolished and most of its powers will be given to the Bank of England. While the FSA is much criticised for its failure to spot the financial crisis in 2008, does its winding down make for a step in the right direction? And is it a pointer towards giving central banks around the world more powers? Well, joining us to discuss that is Martin Wolf, Chief Economics Commentator at the Financial Times and a member of the Independent Banking Commission that Osborne has set up. Along with him, we have tonight with us Lord Meghnad Desai. He's Labour peer and Professor Emeritus at the London School of Economics. Martin, Lord Desai, thank you very much for joining me. Martin, if I can start with your view, I know that you are a member of the Independent Banking Commission. What do you make of this move to dismantle the FSA and distribute those powers over, I'm told, 3 different regulatory authorities, including the Bank of England, which is where the bulk of the powers will lie?
Well, let me first make quite clear that our Commission has nothing to do with this.
Right.
So it's a completely separate thing. So let me just focus on this issue. As you said, the FSA was much criticised, but the simple truth is that all the bodies responsible for overseeing what was going on in the British economy failed, including noteworthily the Bank of England itself, and the main reason for this had nothing to do with institutional structure, but it had to do with the ideology on which everybody was working at the time about light touch regulation and efficient markets. So I think it's very unfair to blame the FSA and to think that somehow the bank was a better regulator or had a better performance. Now, would the new structure, leaving aside the huge transitional problems, would the new structure do better? I think the answer to that is we don't know, but there are pros and cons. The pro is we will have one institution that is clearly responsible and clearly accountable, and the Bank of England, as lender of last resort, will have more information, or should have more information, about what's going on in the financial system in detail. So that's the big plus. The disadvantage is if you like, the obverse of the advantage. There's a complete concentration of power and authority in one institution, unchallenged and unquestioned, and this is a very hierarchical institution with a long history of ignoring things going wrong. So it is quite possible, if not likely, that despite the theoretical advantage, this monopolization of power might lead to mistakes quite as serious as the ones we just saw.
Martin, if you could also explain to us, does this in a sense just simply mean a reversal to the pre-1997 times, simply because that's when the FSA was introduced by Gordon Brown? So are we just going back to what existed pre-1997, or are there differences between what existed prior to 1997 and what is being proposed now?
There are some important differences, and there are some aspects of the new proposals I don't understand, in particular how wholesale markets will be regulated, how precisely they will be regulated, the sort of conduct of business in wholesale markets, which was before 97 outside the Bank of England, but there was not a super regulator. There were a number of separate bodies looking after these sorts of questions. But in terms of banking regulation, more narrowly defined, yes, it is a return to where we were before then. It should be remembered that one of the reasons for creating the FSA was the belief that you couldn't regulate banking institutions independently of the markets in which they were so deeply embedded. The two had become very close together. As we have seen since then, that's absolutely true. So that in going back to in the regulation of banking to where we were at that time, that new issue now arises, which is who is actually going to look at the way the markets are behaving and how the markets interact with the banks. And it's not clear to me in the new structure exactly how that will work.
Lord Desai, I know that the FSA faced a lot of criticism over the past 2 or 3 years, many people questioning, whether a super regulator is good enough to be able to deal with crises like the 2008 one, leave alone be able to recognize they're coming. But you seem to believe that this is the wrong time to dismantle the FSA, am I correct?
Well, I am not a great believer in these cycles of regulation, because all we are doing, as Martin was pointed out, and as you were saying, that we are basically going back to the pre-97 days. But when the FSA was set up, we were not really looking at banks to be regulated, but lots of other non-banking financial institutions also being regulated by the FSA. Now, these new arrangements concentrate quite a lot on bank supervision and bank regulation, but it's not at all clear, as Martin said, what is going to happen to the rest of the financial markets. And I think to ask the Bank of England to be responsible for the macro prudential regulation, as well as hive off some part of FSA under the Bank of England to look after each individual bank regulation, the micro regulation. I'm not at all sure that it is good to rely on just the Bank of England, because before 1997, the Bank of England was not all that successful. BCCI failed, and nobody looked after that. The Baring brothers, Nick Leeson, and that whole episode was there. Johnson Matthey failed. So it is not as if the Bank of England was super perfect and FSA was found to be too bad. I think we're going to try this thing out, and when the next crisis comes, we may have to revise again.
Lord Desai, what is the solution then? Because the FSA itself has been super criticized, if I may say, for a super regulator. And if the proposed system is unlikely to work, or if you don't have as much faith in the Bank of England to be able to do that work, then what is the best option?
No, we are right now also in a flux, because we are thinking of a number of other structural changes, like, for example, living wills for banks, so that banks will be monitored in order to see whether they're about to go bankrupt or not. The problem is, it's not that banks fail, but we should not have to have taxpayers' money engaged in rescuing banks. I'm not against banks failing. I'm against banks being rescued. And we have to have arrangements whereby the regulator will be able to see the danger signs coming and prevent that from becoming a liability on the taxpayer. Now, the G20 is going to discuss bank reform. Martin's commission is going to discuss bank reform. So all this is going to be in a flux for at least 2.5 years. And a new structure may emerge, new arrangements may emerge, and then we'll be better informed as to whether the Bank of England is the proper authority to do this job or not.
Martin Wolf, this has been an ongoing debate for the last 3 years. What is the best suited structure, or what structure can efficiently actually achieve all of this, as you all have both laid out? For instance, there is a possible redistribution of powers in the US between the Fed Reserve, the FDIC, depending on how the regulatory bill will go through. In India, we've experienced that giving most of the powers to the central bank has actually meant good things for us, because we were reasonably protected from what was going on across the world. So is there a perfect structure? That's one part of the question. And the second part is, there's been some criticism in the press about the timing of this move of dismantling the FSA and bringing in 3 other organizations, or redistributing the powers. Is there anything like perfect timing ever?
Well, the answer to your question is there's certainly not a perfect structure. The general view at the moment in the world is to move towards ever greater control by the central banks. And there's a logic to this, because of their enormous role as lenders of last resort and as the guarantors of macroeconomic stability. But there are also dangers, and we're going to find that. And it's worth stressing that some of the systems that did very, very well are systems that have exactly the characteristics we're now abandoning. That I had independent regulators. I understand Canada, for example, which has done well, has an independent regulator. So we are moving in the direction of central bank dominance, but the idea that we have a perfect structure is wrong. Second, the timing is basically political. Let's be quite clear. George Osborne committed himself to do this, and the reason he wanted to do that was to demonstrate to everybody that the reason we had this crisis is because of Gordon Brown's structure. And this is just wrong. It isn't true that we had this crisis because of Gordon Brown's structure, but it has a political advantage in saying this.
Well, Lord Desai, considering all the points that Martin's just made, and the fact that maybe we also need, a lot more disclosures coming in from financial service providers or from banks. What do you make of the move to dismantle the FSA, redistribute the powers? Should it be accompanied by a far bigger financial regulatory overhaul, as is being done in the US? Or do you think that this itself will maybe to some extent help change the way risk is perceived and is monitored?
No, I don't think we're still waiting for the legislation the government will have to bring in to implement these changes. It cannot just do it like that. And so lots of details of the new arrangements are yet to be seen. But what I also think is that, in a sense, the big failure came because governments could not resist cheap credit. The Chinese were lending us money like there's no tomorrow, and that cheap credit the central banks allow to get into the system, and when money is cheap, people do silly things.
And those are problems that will take more than just a change in regulatory structure to address. Martin Wolf, last point to you. You mentioned some transitional problems. If you could reflect on that and as well give us a sense of what is the likely timeline. I'm told a bill to be able to dismantle the FSA and distribute the authorities is likely to only be put up in British Parliament in 2012.
Well, my understanding at this moment, and I haven't looked at it in great detail, is that the idea is legislation would occur which would allow the changes to be put in effect, as it were, to be completed by 2012, so over the next 2 years. And that sounds realistic to me. This is an enormous upheaval, and the legislation presumably has to be very precisely drawn. But I presume that will be introduced fairly soon, but it will have to be properly debated in the House. That we are going to have 2 years of radical uncertainty. This is obvious. We don't know how this is going to work out. The FSA is going to be the regulator while it's being dismantled, and fortunately for them, they have persuaded, which is quite an achievement, the chief executive of the FSA to go to the Bank of England and carry this over as a new deputy governor. That will give a degree of continuity. And of course, it is worth mentioning that the independent commission on which I'm serving is only due to report in September 2011, and then presumably, I imagine, there will be further legislation or further action relevant to the structure of banking. So one of the things that we are clearly doing here is creating a great deal of uncertainty. And uncertainty, of course, does have costs, particularly when you're trying to get out of a huge crisis which was generated by the financial system, where much of the uncertainty now lies. So we do have to accept that however desirable the end state may be in all these respects, that there will be costs, possibly quite severe ones, of getting from here to there.
Well, fortunately, the silver lining is that this will throw up many more occasions for us to have both of you back on the show. Thank you very much, Martin Wolf and Lord Meghnad Desai, for joining us on Your World at 10 on CNBC TV 18. With that, it's time for a quick break. We're going to come back with all the national and political news headlines.